Well, Universal Coal raised 20 million Australian dollars and listed on the ASX at the end of 2010. Its thermal and coking coal projects, however, are in South Africa. Let's talk to the man leading the company. That's the chairman, Tony Harwood. Tony, thanks very much indeed for joining us today.
My pleasure.
I want to take you back to a quote we had from you in December. We'll now be focusing on increasing our coking coal inferred resource. You're referring to prospects in both Berenice and Somerville, drilling due to start, I think, this year. Combined target there of a billion tonnes of coal.
Yeah, we're really excited about, certainly about the Berenice project. It looks like it could be quite a lot of open pit material. We're targeting a billion tonnes there. We have put 6 holes down in already. We're continuing that drilling program. We hope to do at least 46 holes on that project, and during the course of over the next few months come out with continuing results on that.
I was going to say that's the key, isn't it? One of the key dates, if you like, in terms of when you get the next set of data to prove whether you've got those billion tonnes or not.
Well, we're confident we have got the billion tonnes. It's 30,000 hectares of ground, so the coal is definitely there. It's just a matter of defining the quality of the coal, the depth and the mineability eventually of the coal. So we'll be coming out with continuous statements. There is quite a long lead time in terms of assays for once you're drilling. The drilling's a simple part. The assays and the actual resource definition. But we're confident we should come out with some resources certainly this year and likely this half of the year.
Okay, well that's coking coal. If we move to thermal coal, you've got Kangala, I think 104 million tonne resource, feasibility studies due to start in the first half of this year. You've got a production target of 3 million tonnes a year from there and ramping that up to 6 million.
Well, on Kangala, we've already started the feasibility study. It should be completed in the second quarter of this year, and then we'll start construction. The target there is 3 million tonnes run of mine operation. We're very excited about it. So it's largely thermal coal, but there is an export portion of that. Actually, there's a press release going to be coming out very shortly today. In terms of increasing the resource base on that, it's going to go up to about 124 million tonnes with better categorisation of the resources there. So we're really excited about this project. It's a very thick coal seam, it's up to 15 metres in thickness. It's 1.6 to 1 strip ratio. It's very low. It's a very low cost operation, near infrastructure, and this is the focus of our company. It's low cost, high quality, high margin, near infrastructure projects that we can bring to account.
Okay, and just we need a bit of background on this. You own 70% of this. Explain who owns the rest, because that's important.
There's a black empowerment group called Mountain Rush that own 29.5%. They're a black empowerment company. The legislation in South Africa, you need at least a 26% ownership by black empowerment groups or previously disadvantaged groups. And Mountain Rush are a very good partner, and we hope to develop this asset together in South Africa to bring it to production.
You've got a couple of other prospects as well. You've got Rudakop, if I pronounce it correctly, it's 78 million tonne resource, yeah. And also Brackfontein, which is what, 125 million tonnes. When do you make decisions on those? Where do they fit into the strategy?
Well, the Rudakop project, we've already applied for a mining license on that. We've done extensive drilling on both. We are continuing drilling on Brackfontein. We hope to put in a mining license application further later on this year. These are 2 earn-in projects, again with separate black empowerment groups. We will earn it up to 50% of the project by work. By program of work, by producing a feasibility study. Once we put the mining application in, we will then do a bankable feasibility study, and part of the $20 million actually we raised is actually to complete those feasibility studies. Okay,
well speaking of which, I understand Kangala is pretty much self-financing. What's the cash burn rate, and when would be the next time that you might need to come to market to get more cash?
We are on Kangala. We'll be in production later this year, run of mine. We'll be in full production, ramping up to full production next year, 3 million tonnes a year. We are also building up a portfolio around these particular projects, which will need additional cash. So we're looking in the near term to have 3 mines in the next 3 years. And those are all going to need building, so we'll naturally need to raise money for that. Also, we're very excited about what we're seeing on the Berenice projects and the coking coal. And as we, the money that we've raised so far is enough to drill those, or start drilling. So as we get more exciting results on those, and we've intersected a 40-meter sequence of coking coal or bright coal. We've not had it analysed yet on that in some of our first holes. And as we build up knowledge base, we naturally want to progress these and advance them as fast as we can, and that will need further capital.
Okay. Alternative listings an option?
Oh, absolutely. We will look at an inward listing on the JSE, and you never dismiss the aim. It's a great market over here, and certainly we have a number of London institutions which are part of Universal Coal at the moment.
Okay. What about customers? I mean, obviously you're not producing yet, but have you talked to people as to what you will do with what you get out of the ground?
We're in constant discussion with Chinese groups, Indian groups, Korean groups who are very interested. Certainly in our exports, thermal coal. Great power stations being built over in the east, certainly the west coast of India. And we've recently seen the floods in Queensland, which is causing some concern about thermal coal. We've had massive interest in terms of our thermal coking coal up in the north. It's early days yet. We're not looking to sign off-take agreements at the moment. We really want to find out what we've got there, but we're really excited. It's 30,000 hectares of coking coal, and we're targeting the open pit or near surface material close to infrastructure.
But in terms of strategy, there's lots of M&A in the sector. You've got some pretty big neighbours around, such as Rio Tinto and Exxaro, but you are planning to take these to production.
Oh, definitely.
So that's the strategy.
Our strategy will be a production company. Our strategy is not to drill thousands of holes and be a big exploration company with lots of resources everywhere. We will have 3 mines in the next 3 years. We are looking at going concerns. We have a management team which individually over 26 years of experience, executive experience in the mining business in South Africa. We're building on that reputation, on those reputations. They're very good. Looking to acquire going concerns, other assets. Again, consolidating around what we already have. Yes, the sector is ripe for consolidation. It is ripe for professional groups like ourselves to get involved in that consolidation. And I believe we've got a lot of trust of many groups in the sector to deliver on our promises.
Now, finally, Stonebridge Securities has a target price of 95 cents, about double your current level. What's the message to investors then?
Well, the message to investors, we actually listed at 26 cents. I think today we're around 46 cents. 95 cents is a great target to go for. I think it's well achieved. It's very well achievable. Certainly, the coking coal assets are huge, and I'd say watch this space, investing in Universal Coal, because we're going places.
Okay, Tony Harwood, thank you very much indeed for joining us today.
Thank you very much, sir.
This film is for educational and leisure purposes only. Proactive Investors does not provide investment advice. The company is a publisher and is not registered with or authorized by the Financial Services Authority. Please refer to the full terms and conditions on the Proactive Investors website.